Hey, Joel, how you doing?
Mate, I'm doing all right. I'm doing good. How are you doing?
Good, lad. Yeah, I'm not bad at all. You've obviously just moving into a new place.
I am. You can see it behind me. We've got the plants.
Yeah, you got a
Got
bookshelf
everything.
there, bro.
Can't complain.
Bookshelf. Make it a little bit more
Yeah,
sophisticated.
dude. I'm not. Yeah, the thing is, I only own like 10 books, so I'm not really sure what we're
Oh,
going to
mate,
do with all the
you need to
space.
build up a little library there. Build one up.
That's true. I do.
It looks good as
I
well.
do.
It looks good for the.
Yeah, mate.
Yeah.
When people come over, they'll be like, "Oh, this guy's clever."
Whereabouts sort of area? Is it Clapham you're at?
Clapham, yeah.
Nice.
Yeah, Clapham.
Nice, bro. Oh, yeah. When did you move in?
Saturday.
Oh, Saturday. Okay, yeah. Yeah, so, yeah, I'll just apologise, people in advance. Joel's on his 4G, hence why you're a little bit unclear on the screen. A bit pixelated.
Yeah. Oh, yeah, sorry about that.
Yeah, but all good, all good. All right, dude, let's obviously jump into this week. Obviously, every single podcast title over the last 6 weeks or so has just been about dollar being annihilated, dollar being slammed, dollar being hammered. When would the dollar fall? When would the dollar stop falling? Those have just been the titles. I think we're on course for the 7th consecutive week in the red for the greenback. So nothing really new there. I mean, is there anything would you add in terms of, obviously we've discussed about the economic situation at the moment, still vulnerable. The labour market actually saying that. Let's talk about labour market quickly because obviously we've got NFP today. By the time people watch this, NFP will be out. But we saw we're starting to still see a bit of a shaky patch for the labour market, right? Initial jobless claims, I know they dropped a little bit this week, but it's not great. It's still over 1 million people claiming unemployment, well over. And then the ADP, obviously privately conducted, but that was still a bad number, wasn't it? Like really off.
Yeah. It was expectations were for 1.5 million, came in at 167k. So that's like missed expectations, like 3 million pretty much.
Massively.
It's not good. And then it was, as well as the ADP being bad, the ISM data we got this week, because we had ISM manufacturing and non-manufacturing, it was good. The headline was good, but the employment sub-indices were bad for both of them. So
I know.
Not looking good.
No.
For the labour market in July.
Yeah, it's none surprising really, given obviously at the end of the day, the case is still rising there and companies are still scaling back for sure. Like we're seeing a lot of obviously companies scale back. There's still companies in the US that are unfortunately going into administration. It's still a very rough patch right now. And, let's just sort of quickly talk about stocks. We were analysing stocks here in the office, the indices, like obviously NASDAQ, Dow Jones. I was particularly looking at Dow Jones and man, these indices are still oblivious to reality right now. Man, companies are going out of business. Companies are losing workers, but then stocks are still rallying. How does that freaking make sense, dude? It does not make sense. I don't care about Fed QE. Look at reality right now. Like, why are stocks rally? This is a huge bubble, surely.
I know. Well, yeah, dude, I agree with you, but I think the thing is, stocks don't care about reality. They don't care because they're big companies. Like the S&P 500 or the Dow Jones, none of those stocks are going to be going bust because of coronavirus. Whereas, some of them might have their earnings hit in the short term, but this low rate environment is really good for them because their debt is now really, really cheap. So they love that. Yeah.
That's a really valid point, dude.
And also, and also obviously, a lot of the gains that we've been seeing in US equities has been driven by big tech because big tech has come out of this coronavirus pandemic really, really well because, to be honest, we're all more reliant on big tech now than we were because of, working from home and all this kind of stuff. So,
do you know what?
Yeah, it's interesting.
That's a very good point. I forgot to actually look at it from that perspective. Yeah, that's a very good point. But do you not think is there a risk of this being a bubble, do you believe? Because a number of people calling it, like Warren Buffett's saying that it's a bubble at the moment. Like, what could be a catalyst to see this rally? Because at some point it's got to come back. Like, what could be? Do you think could be a driver of that? If we go into another second wave, like properly, or
I don't think so. I think the only thing I think stocks are going to keep. I don't think they're going to gradually keep going there. I think just at a gradual pace, like they have been the last couple of weeks. Probably, I honestly think this will probably go on for a couple of years, and I think the big risk for stocks could be when the Fed starts to tighten policy, because like we were just been saying, this whole rally is based on easy Fed policy.
True.
So that's when it could come unstuck.
To be fair, that's probably going to be a long time away before the Fed even start considering tightening up, right? Very long. They've made that
exactly.
Clear. They've made that clear. So, okay, fair enough. No, thanks for that, Joel. And then, obviously, what else have we had going on this week? Let's talk. All right, dollar and stocks aside, let's talk about Bank of England. Bank of England on when was it? Thursday. I was surprised they were not as dovish as expected. Which supported GBP initially. Saw a bit of upside there. Negative rates obviously being kind of ruled out for now as an option. They've sort of struck in the line through that. Yeah,
very, very interesting meeting. Like you say, not as dovish as expected, because they basically said that they prefer doing more QE or more dovish forward guidance over negative rates, which makes me think, I don't know if we're going to see negative rates for the Bank of England now. A couple of weeks, I was thinking it was likely. But yeah, no, I don't think.
Yeah, because the markets at one point were starting to sort of price in that as a potential. But yeah, you're right. I don't think we're going to see that. What do you think happens, GBP? This upside surely has got to be capped. Like, GBP's has been on a crazy one like the last few weeks. Man, Brexit, the timeline, like meetings are picking up pace towards the end of this month. Like, what the hell? What's going on? We're going to leave on WTO terms.
I know. I 100% agree with you, mate. Like, obviously, GBP, like as in cable, GU should be higher because of dollar weakness, which makes sense to me. But like, yeah, like what you're saying, like, why was GBP outperforming other currencies with all this Brexit risk? And that's when I'm like, I don't know. I think it's vulnerable, to be honest.
It's got to be like, and the thing is, when the pound falls, man, does it fall hard? Like, it's the floodgates open. So, this could be a pump before a dump, maybe. As I say, if there's no progress on Brexit, that's going to be the next catalyst for a GBP death, basically. But, yeah. What else have we had this week? Anything else? Been quite a quiet one.
USA market, be it Bank of England. That was, to be honest, the most interesting stuff, really, wasn't it? Markets haven't moved too much.
Yeah, I mean, last night, CAD took a little bit of a hot hit just on the tariffs. Steel, aluminium. How do Americans say it? Because we say aluminium. They say aluminum, innit?
Aluminum.
Yeah.
Aluminum.
So there's a bit of a tariff war again between US and US and Canada, their neighbours.
Yeah, CAD didn't like that, unsurprisingly.
I just think Trump doesn't like that Justin Trudeau anymore, really, does he? So he's probably just taking a little stab in there. Stab. So, yeah. But, yeah, that took a...
It's not surprising, because they stand for, like, the complete opposite things, just as people, don't they?
Completely, yeah, it's true. So true. But, yeah, that came out of nowhere. I don't know what Trump's on here. Don't know. God knows. Maybe he's just maybe a little tactic ahead of the elections. Who knows? But,
yeah.
What's the crack for next week, dude? What we got going on, baby?
Next week, a couple of interesting things. We got UK, quite a lot of data, like GDP we were talking about earlier. Going to be a big hit. It's Q2 GDP.
Does this one get hit worse than Q1? Do you reckon it's worse than Q1? Because remember, that's the worst that we...
Yeah.
That was like 3 or 4 times worse than what we'd seen in 2008, 2009 crisis. Is it going to be bad, do you think?
Yeah, I think so, yeah. I think the market expectations for like minus 22% quarter on quarter. So big hit. Not as bad as the US though, to be fair.
Yeah. Sorry, I was just playing. Can you hear that when I do that?
Nah.
Oh, you can't hear it. Sorry, I was playing like a wah 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 sound. All right, cool. All right, so okay, and then we've got another highlight of the week. RBNZ. Are they expected to do anything over in New Zealand?
Yes. Well, no, because nothing's really changed like that much for them in terms of the macroeconomic outlook. But you got to remember they're very dovish compared to the RBA, and they don't like NZD strength, so they're probably going to reiterate those threats of negative rates or whatever.
Yeah, they did. Then they backtracked a little bit, I'm sure, last time. No? Did they backtrack?
I don't know. It's the RBA that's completely backed off.
Yeah, they have. Okay.
All the dovish threats.
The thing is, though, with RBNZ, when I look back at data for New Zealand, it's actually been all right. Like, we saw the labour market data earlier, and remember, they like a healthy labour market, and that earlier in the week beat expectations, didn't it? Data hasn't been that bad from New Zealand. It's been all right. You know,
Yeah.
considering them and Australia really were the best, you know, a couple of the two of the major economies that dealt really well with coronavirus, didn't they? Really well. So I don't know. I don't know. Maybe they will obviously stay dovish, but there isn't. I don't think there's any reason for them to be any more dovish than they have been. You know.
The only reason they would do it is because they want to weaken their city.
Yeah.
That is their primary motivation, I think.
True. Yeah. Okay. What else going on? We've got US retail sales, isn't it? That's pretty much it.
Yeah. And then other than that, a bit of Chinese data might be interesting, like industrial production and stuff. That's on Friday morning.
Yeah.
So Aussie and Kiwi do a little bit on that as well. But yeah, that's pretty much it, dude.
Sweet, man. All right. Well, bless up, Joel, and have a good weekend, dude. And,
you as well, mate.
Stay lit, baby. Let's get it.